Oil prices suddenly jumped above $82 per barrel amid the news that China was not only about to lift restrictions but also on track for gradual recovery and economic activity. Beijing issued a second batch of a 2023 crude oil import quotas, raising the total for the year by 20% compared to the same time last year. This means that the government expects domestic consumption to grow, and this was enough for oil prices to gain value. Judging by the pace of growth, investors seem to count on a continued rise in quotas, and the current level is regarded as rather low. This comes as no surprise. After all, there is no guarantee that the situation will not worsen in the near future, although Europe has managed to avoid energy shortages this winter. Moreover, energy costs are extremely high for the region. Consequently, European countries will seek new supply sources, which in turn will lead to intensified international competition for oil and gas. This may result in local energy shortages and contribute to rising their value. From a technical point of view, Brent crude oil futures got out of a sideways range by gaining upward momentum. As a result, the quote surged by 4.5% to settle at $83 per barrel. However, such a sharp price change may signal that the asset has probably entered overbought territory in the short time frames. That is, a pullback is likely. To extend gains, the quote needs to consolidate above 83.5 on the 4-hour chart. Despite a growing number of Western media reports about Russia's huge revenue loss due to the price cap, the ruble is making attempts to gain value. The dollar has already slid below 68 rubles and is likely to hit towards 65 or 60. In fact, the market ignores any messages, and this can be attributed to the dependence of the Russian currency on political factors. Moreover, the number of unprecedented sanctions imposed on the Russian economy is so huge that all that remains is to introduce a complete ban on a trade with the country. At the same time, the economy had clearly survived and no collapse has happened. This supports the ruble to some extent. Furthermore, given its heavy losses posted in December, a correction was inevitable. Apparently, this is exactly what we are now witnessing. As for gold, no further reports of increases in physical gold holdings by major central banks have been reported, so the yellow metal is stabilizing just above $1,880. Notably, prices are in no hurry to go down, although the asset has recently posted impressive gains, which signals overbought conditions. Apparently, gradual step back from the dollar as a dominant means of international payment will be main topic of 2023. Given that there is no real alternative to it yet, a number of the world's largest economies will be forced to increase their precious metal reserves, and this will lead to a decline in the gold supply and a rise in its value. Thus, 2023 might be a good year for the yellow metal. In the meantime, if the price consolidates above the 1,880 mark, the volume of long positions will increase further. Alternatively, if the price returns below 1,869, the market will most likely see a trend change. And that's all for now. We continue to learn developments on financial markets. Subscribe to our channel and follow news with us. See you soon.